Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Jackson Square Funds report, and trust me, we'll unearth some surprises about where your money is really going, maybe even to places you wouldn't expect. This report covers the first half of the fiscal year ending in October 2025, so it's a peek at how these funds are doing between November of last year and April of this year. We're looking at two main funds, the Large Cap Growth Fund and the Mid Cap Growth Fund, and several classes of shares within them, and it's not just numbers, as we might find a few interesting decisions these funds have made that could impact the direction of your investments. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Join up and share your take with the others after this video is over. This is a semi-annual report for Jackson Square Large Cap Growth Fund, and the period it covers is from November 1, 2024 to April 30, 2025. Remember, this is a snapshot in time look. One of the first things investors usually look at is the cost of investing. For the investor class, the costs are about $47 for every $10,000 invested, or 0.93%. This is annualized, meaning that if you keep your money there for a year, that's what you can expect to pay in fees, assuming everything stays about the same. It's always a good idea to check these costs since they eat into your returns. Let's consider how actively managed this fund is. The reported portfolio turnover is 7%. This number tells you how often the fund manager is buying and selling stocks. A low percentage like this suggests that the fund isn't changing its holdings very often, meaning it tends to stick with its investments for longer periods. What exactly does this fund invest in? Well, the top holding is Microsoft, making up 11.4% of the fund's assets. Next up is Nvidia at 9.2%, then Amazon.com at 7.9%. Rounding out the top five, we've got Alphabet, that's Google's parent company, and MasterCard. Breaking down the sector allocation, information technology dominates at 33.0%. Financials are next with 19.7%, followed by industrials at 17.5%. These numbers can give us an overview of where most money is focused. If you believe in the tech sector, this fund might align with your views. Let's switch gears to the institutional class of the Large Cap Growth Fund. This one uses JSPX ticker. For the institutional class, the cost dropped to $35 per $10,000 invested, which is 0.69%. It's less than the investor class. This is often because institutional class shares have fewer fees associated with day-to-day transactions. The institutional class also report a 7% portfolio turnover. What's in the investments for institutional class? The top 10 holdings are the same as the investor class. Similar to the investor class, we see 33% in information technology in terms of sector breakdown. All right, what if we're looking at IS class symbol DPLGX? How different is it? For the IS class, expenses are $32 for every $10,000 invested. That's 0.64%, just a bit lower than the institutional class, so we are talking minor difference. The IS class shows the same portfolio turnover, 7%. Their Microsoft holding? It's the same shares and percentage with 11.4%. We have an identical sector breakdown. Let's pivot to the Jackson Square Mid Cap Growth Fund, symbol JSMVX. This fund focuses on small to medium-sized companies as opposed to the previous Large Cap Growth Fund. For the investor class, the costs are $59 per $10,000 invested, or 1.23%. This could be higher because smaller companies can be more volatile and require more research. Mid Cap Growth reports a portfolio turnover of 27%. This suggests it's actively managed. Again, the manager constantly buys and sells stocks, hoping to capture the performance of the small to mid-sized firms. This is more active than large cap. Here are its top holdings. Wyndham Hotels and Resorts and Clean Harbors both share 4.9% of the assets. Then Entergrease and SBA Communications all hold 4.8%. Information technology makes 18.2% of it, and healthcare makes 18.3%, but industrial companies are in the lead, 29%. Institutional class symbol JSMTX, what's the story? For the institutional class, the costs are $47 per $10,000 invested, coming out to 0.98%. The institutional class has a portfolio turnover of 27%. Again, just like the investor class, their top holding is still Wyndham Hotels at 4.9%. The sector breakdown too remains the same. Industrials at 29% and infotech near 18%. One last thing, class IS comes with the symbol DCGTX. For the IS class, it's $42 per $10,000 or 888%. The IS class is the cheapest so far. Portfolio turnover here reports to be 27%. The IS Class 2 shares the same high holdings and the same %S. Information technology makes again a significant portion, 18.2%, but industrials hold a huge chunk of 29%. Let's actually see the health of these funds. The total asset for the large cap growth fund is $178 million. Remember, assets include stuff that's owned, like investments minus the debt. For the large cap growth fund, the advisor made over $500,000 in investment advisory fees alone. The fund experienced large share transactions, payments for shares redeemed, money leaving the fund eclipsed, proceeds from shares sold for each of the IS institutional and investor classes. SMID Cap also experienced a net investment loss of over $400,000. That's before any gains from actually trading investments. One thing that I found is interesting, although they are presented as two separate funds, the top 10 holdings are almost all present amongst almost all classes of stocks. It really depends on whether you want 1%, 2% cuts due to taxes. Now, what do these results say about the Jackson Square funds? On the large cap growth fund, there isn't much different from all the classes of stocks. Their portfolio turnover remains the same, and so do their sector allocations. Is Jackson Square having a difficult time with large cap stocks? Jackson Square may want to boost portfolio activity a bit in the large cap growth fund. The lower portfolio turnover indicates a potential need for a more dynamic strategy to better capture opportunities and manage risks. An opportunity would be to look at emerging markets in 2025 instead of only sticking with American stocks. SMID Cap sounds like it's doing fine. It probably isn't worth it getting the IS class, but having a more diverse portfolio might give them a boost. Alright, that's our breakdown of Jackson Square Fund's latest filling. What's your take on these numbers and what they signal for the fund's future? Do you think Jackson Square has your best interest in mind? Do you think active management should be this expensive when most of the portfolio remains largely inactive? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.